Well, time to get into our first conversation of the day. Investors really waking up midweek today to be greeted by a sea of red on Wall Street. U.S. stocks fell in volatile trade on Tuesday, giving the S&P 500 its biggest daily drop in a month. Now, this as a push for the impeachment of U.S. President Donald Trump gains momentum among Democrats in the U.S. Congress. And for more analysis on this, we are happy to speak this morning with Han Tan. He is market analyst at FXTM, joining us for this conversation. Han, we're seeing stocks whipsawed on Tuesday by worries about President Donald Trump's political future. So what do you think will be the impact on the market as proceedings go on?
So it's another reason to be risk averse, and that's what we're seeing in the stock markets in Asia this morning, as you pointed out earlier, Stanley, right? Because look, investors are already having to contend with US-China trade tensions. You've got slowing global growth. You have Brexit uncertainties. So the prospects of US President Donald Trump, possibly being impeached means that's one more thing for markets to keep an eye on. So moving forward, investors will view this through the lens of the 2020 elections and what this could mean for policy continuity in the U.S.
Well, speaking of equities, we saw some specific stocks do well, particularly Nike shares. Those hit an all-time high because new products were driving sales and earnings were topping expectations. So give us an outlook for U.S. equities as a whole.
Right. So overall, I expect the S&P 500 to retest record highs. Keep in mind, it's about 60, 70 points away from setting, 60, 70 points away from those levels as we speak. So, look, keep in mind that U.S. stocks are caught between these two forces, right? On one hand, you've got global trade tensions and the prospects of more Fed rate cuts on the other hand, right? So if the Fed eases further, that could push U.S. stocks higher. But if the U.S.-China trade conflict, if that starts to feed back negatively into the U.S. economy, that's going to dampen the outlook for U.S. stocks.
Now, another bit of detail that's come out of the U.S. would be disappointing consumer confidence data. Concerns, of course, over the prolonged and prolonging U.S.-China trade war. How is the U.S. economy likely to fare given all this that's continuing to develop?
Right. So we expect the U.S. economy to outperform its peers and hold up pretty well, especially considering that the Federal Reserve has already lowered the benchmark interest rate twice this year. Markets are expecting perhaps one more in October there, right? But let's be clear. The U.S. economy is slowing down. Okay, but it's not as steep a slowdown compared to what we're seeing in other major developed economies. So I think that context is very important. So with the U.S., you've got jobs growth, that's still intact. So with that in mind, U.S. consumers are expected to keep the U.S. economic growth engine chugging along.
Yeah, recently we also spoke with an economist, and he said, if there's going to be any kind of a fallout, it'll take some time for it to develop. So while the U.S. may actually look, pretty decent, faring well at the moment, this may not be the case as we, track further on into the year.
Well, great point. But then at the same time, you have that lagged effect for those rate cuts as well. Keep in mind it came in July and then another one this month as well, possibly another one in October. So those also take a few months to feed through into the U.S. economy. The idea is to try and cushion the slowdown that the world's largest economy is facing right now. So with all that said, we still think that the outlook for the U.S. economy is one that speaks of resilience, versus the kind of figures that we're getting out of the likes of Germany and Japan right now.
We are speaking with Han Tan, market analyst at FXTM. Han, I'd like to get your thoughts on the UK. The country's top court has ruled that Prime Minister Boris Johnson's decision to suspend Parliament in the lead up to Brexit was illegal, and there are now widespread calls for the UK Prime Minister's resignation. So what is your outlook on how this is going to impact the pound?
Right. So the Supreme Court's decision, right, it does not fundamentally alter the Brexit equation, and I think that's important. So that's why when we got that news yesterday, you didn't see the pound break past 125, break above 125 against the US dollar, because, ultimately investors want to know what's next for Brexit. How will the UK and the EU establishment actually resolve this impasse? Sure, the court's ruling was politically significant, also judicially significant, but fundamentally the Brexit impasse remains intact. So I think that's what investors are keeping their focus on, especially considering that the October 31st deadline is coming just a few weeks away from here.
Right. Well, from pound, let's talk about oil and other safe haven investments. What are some of the developments in these other assets?
So personally, I think there is still more upside for gold. I think we can see gold hitting 1560 before the year is over. Keep in mind, market sentiment is still very, very fragile right now. Many risks to consider. These are some of the risks that we have just spoken about just a few minutes ago, right? Now, so that's the outlook for gold. Given the risk aversion that's out there in the markets, it's a very supportive environment for gold. I expect 1560 to come into play before the year is done with. Now, as for oil, I think it has a likelier path to fall below $60 a barrel rather than reaching $70 a barrel. This is Brent futures I'm talking about here, because once again, you have the same macro factors that are in play. You've got global trade tensions that's dragging oil lower because of waning global demand. But at the same time, you've got potential spikes in geopolitical tensions or other supply risks. If those flare up again, we could see some gains for oil, but I think it'll be limited given the drag from the demand side.
So what about that attack that happened at the Saudi Arabian facilities about a week and a half ago? Did that, looking back, have any much of an impact really on those prices?
Yeah, it did. It had a massive impact. We saw a massive spike in oil prices, but since then it has moderated because you've got the Saudi Arabians who have actually come out and said that they are working hard to restore normalcy in their output, right? So that then basically adjusts the supply-demand equation back to where it was before. That's why we're seeing oil prices now pretty sluggish around the low $60 a barrel mark. Now, I think what markets are focused on is how quickly the Saudi Arabians can actually restore the output that has been lost due to the attacks that you mentioned there. So once it's restored, you've got supplies plus waning demand. We could see oil perhaps tilt to the downside here.
So what are the key economic events ahead of us this week? And
so key themes for global markets for the UK obviously will be what's next, right? When it comes to Parliament, now that the Supreme Court has ruled that the prorogation has been deemed unlawful, they have to reconvene. Prime Minister Boris Johnson has agreed to comply with the court's ruling. So then what's next? What's going to happen in Westminster? All that means that the pound is expected to be quite sensitive and volatile, like it has been in recent months, to these Brexit developments. So that's one key theme. And of course, you got to pay attention to anything related to US-China trade tensions, right? Any movements on that front, be it inching closer towards a deal or perhaps more shows of goodwill, or versus perhaps stepping away from some of these goodwill that's been showed in recent weeks. I think all those nuances can greatly affect sentiment and risk assets.
So if you've been having a hazy, perception of how the markets are performing, I'm sure our guest today has helped clear a little bit of that haze away. Han Tan is our guest in Money Mind today, market analyst at FXTM, joining us for this conversation. Han, thank you so much.
My pleasure. Thanks for having me.